So Diana, I just want you to reflect perhaps on what I just mentioned. Like, should we be concerned that the consumer is having a significant difficulty right now? And we will really start to see that come out in the earnings and commentary from various company managements as they report their quarterly earnings. And therefore that would take the stock market down.
Well, we'll see, right? We can't predict that. For now, employment is okay. Don't forget, Canada in particular, and the US as well to some extent, immigration has really given an economic boost in terms of the demand for housing and goods. And to your point in the previous segment about the affordability of same housing, this is why interest rates need to come down. It really is a necessary thing, and I think especially Bank of Canada has been ahead of the curve in cutting sooner and faster, and now they're talking about jumbo cuts. The Fed last time entered its own rate cutting cycle by cutting 50 beeps. So mortgage rates have really started to come down. I think that gives a little bit of a breathing room to the
Mm-hmm.
consumer. Um, as long as employment holds up, and there's lots of pockets of growth in the economies, be it, growth movers like artificial intelligence and the
Mm-hmm.
theme of reshoring. There's lots of good, growthy developments that may keep employment in check.
Mm-hmm. Dan, let's actually dig into some of the details a little bit. Let's talk about Canada and the Canadian market. And for our viewers to understand, you invest in both Canada and the United States. So and what I love about money is money moves freely. I mean, it gets moved to where you get treated the best. So having said that, you look at the Canadian market, the TSX, as well as the U.S. markets. Where are you putting, or where do you want to invest right now?
So to that point, we have, so let me back up a little bit. It's been an excellent year, and clients have done well this year. Given
Mm-hmm.
what's happening with the next rate cut and the election in the US, um, there are some catalysts that might keep the market and the geopolitical headlines that you've mentioned started out with. It
Mm-hmm.
could be a little directionless until the election, let's say, where markets don't like unknowns, and all of these things are unknowns. But when the unknown becomes known, if we have a situation, a macro situation that we have right now, markets tend to do better. For our perspective, therefore, we cast a pretty wide net in the portfolios. Right now, we're in capital preservation mode or
Mm-hmm.
gains preservation mode. It's not about maxing out the return right now, it's about being safer. So, in terms of where we are in Canada, US, US is more of a growth theme. It's where we look for growth in our tech exposure, whereas we're more in Canada for the bank exposure. Our Canadian banks have done pretty well. They have a decent yield. There are, the domestic business has done okay. If you look at the charts of the Canadian banks, we like Royal, National, CIBC. And what you see there is, with the exception of Royal, which is our one more global play, but with the other two, they're more domestic. So we've kept that exposure domestic. We've also
Mm-hmm.
increased our exposure to a couple of the utilities, Enbridge, Hydro, even though we have some of those in the US in the form of Nextera, which is a little bit of a play on renewables, which would work if we have a Harris administration. But bottom line, it's safety, it's dividend, and we look to the US to invest in companies like Apple. We just
Mm-hmm.
sold our NVIDIA, which has been pretty good because we've noticed that, leaders have become a little bit of laggards. So we've cast a wide net and look for growth where growth exists and stability where stability exists.
Mm-hmm. With NVIDIA, it's such a tough call. I actually do own NVIDIA as well, and I've certainly trimmed all the way up, but it still seems so that they are leaps and bounds ahead of anybody else in terms of the chips for AI. And even though these other companies are trying to or thinking they're going to bring it in house, that's difficult to do in the time frame that they probably need to do it within. We'll take a quick break. I'll get your thoughts on that after the break.